All right, today we have the simple numbers weekly accounting rhythm process. This is an issue that we've had a lot of discussions with clients lately, so we felt like it was a good topic to get out there for everybody to, to really look at and pay attention to. Because really the challenge that we see is, are you stuck in accounting hell and not getting your books closed and reports out timely? This is a common issue, and there's always an excuse and a barrier and a problem. And what we really looked at is said, we live our lives on a weekly basis. And so if we can come up with a weekly rhythm of every key critical element of accounting that needs to be touched, then we're able to really just kind of knock it down and eliminate those barriers to where, you can get your reports timely. So we're going to take them section by section and kind of dispel all the myths and rumors. So the first thing is deposits. This is the thing that we believe that everything should be done daily. And so every check that you get from a customer, we want those deposited daily. And the two key things that make it happen is if you get checks, most banks allow for remote deposit ability. So basically you're just running it through a scanner and you'll never even have to go to the bank. If you get a lot of electronic deposits, then you'll want to log on to the online bank account every day and record and make sure that you have those. Never, ever, ever think that you're going to wait for the bank to actually, send you that information at the end of the month. You have to make sure that your bank account activity in your accounting system, QuickBooks or whatever it is the live number, because only you know what checks you've put out into the system. The bank does not know that. And if you're relying on using the bank's deposit or bank balance information to be the live number, you're just one overdraft away from disaster. A key point of control here, remember the person opening the mail and scanning the check should be done by a different person than when he makes the deposit. So if you have the ability to separate those duties, do so. Otherwise, the only way, if you can't control it by people and segregation of duties, you got to control it by insuring the process. And so just make sure that you have a fidelity bond, go to your property and casualty insurance guy and make sure that you have that coverage in there. The next thing we think is an important reporting rhythm is you email daily the bank balance that is in your accounting records, not what the bank says, what's in your accounting records, because this ensures that you're living out of your accounting system. And you email the bank balances daily and the deposit detail as long as you don't have 1,000 people paying you a day. If you have a large amount of daily deposit activity, you would just do it in summary. But we think it's a critical thing to know the pulse and the movement of your cash balance on a daily basis and seeing the fact that, typically everybody takes a big hit when you run a payroll, and then you see it build back up as you're depositing checks along that process. And if you don't have any deposits that day, you're going to send an email and still report on the bank balance and say, hey, we didn't get any deposits today. The other key to this, and we think this is important in all quick flash reporting, is don't do this report as an attachment to an email. We want it in a simple format, cut and paste it into a body of an email if you start it in a Word document or an Excel document, but don't make it an attachment. People don't open it. They'll have every good intention to open an attachment later, but it just never happens. So the next thing is invoicing to customers. I get it that it sounds simple that you should invoice once a month, but even if you have a monthly rhythm, I would highly recommend that you break those customers up into segments and you have a weekly billing process and you bill so many of them every week. If you are constantly in the rhythm of billing, you will find that the quicker you send an invoice, the quicker you get paid. And you may get some argument, oh, well, they're not going to pay us. Well, if I never get it to them, they're not going to pay it. And so the key is if you can break it up into a weekly process. Now, a lot of people are in the services business. If you're doing billable hours and you're really providing, it's almost like a staffing model. You have to bill those. I mean, if you can bill for it weekly, great, but at least bill for those every 2 weeks. And those are critical processes that if you can do a biweekly billing, that will improve the process. The other big key here is remember, accounting doesn't have to be done by accountants. Accounting is a process. And as we say, we can teach a near vegetable how to use QuickBooks. Well, I can teach a near vegetable how to produce an invoice too. And so when you define the process, I mean, the kid behind the counter at McDonald's, when he presses the picture of a Big Mac, he's done accounting, because that pressing that picture on the POS system determines how much revenue to record, what is the cost of labor, what is the cost of food, and how much change to give the person back. All it takes is defining that process one time. Move the big rock, get that piece of it done, and then you can have your salespeople producing invoices and do them correctly. At least have them initially produce it and maybe someone review it if you can't totally trust them. But the closer that you get invoicing to the actual function of the person doing the work and responsible for the work, the better. If your billing is done outside of your bookkeeping system, this is a really common thing where people have operational systems and they don't do invoicing out of QuickBooks or whatever their accounting system is. They've got some operational system. Very, very important is that you reconcile those two systems. In our process, we use a time and billing system in our firm, and it is totally separate from QuickBooks. The billing system that we use is the first to know the invoice that goes to the customer. QuickBooks is the second system that then that data is put in individually on an item-by-item basis. We don't put the detail of the invoice back into QuickBooks, but we know the customer, the invoice number, and the amount. And so then QuickBooks is then the first system that actually knows when a customer is paid. But then we have to take that data and put it back into the time and billing system, and so that those two systems should reconcile. And so from that standpoint, those are processes that really should should work on a regular basis, and the key is the discipline of picking a certain day of the week that process happens faithfully week after week after week. Then on the next process, we're going to go to bill payments to vendors. You got to stay out of the noise of trying to pay bills every day. And I understand if you're short on cash, you're fighting with a monster. But essentially, our goal is we pay bills every Monday. And so our admin person, who's not even an accountant, we've taught her how to do bookkeeping, is she posts all the invoices that we receive that week into QuickBooks on Friday morning and produces a 2-week cash flow forecast report. That comes to me between 2 and 3 o'clock every Friday afternoon. You cannot underestimate the power of that report being issued on a timely and repetitive basis that always gives me a quick and simple look of 2 weeks out and gives me a 2-week warning, in essence, if I see a problem coming in cash flow. But the key, it starts with the idea of a weekly rhythm. And so we only release checks on Monday. If somebody comes by and says, I need a check today, says, great, we cut checks on Monday. Is that good enough? Great, we'll get to you on Monday. And we almost never cut a check other than on a Monday. The key is entering all the bills, and you consider using it this way. You use your accounting system to your benefit, not to the benefit of falling prey to what you think a field says. So like a due date field, consider using only Mondays as your due date if Monday's your day that you pay bills. And so, put the Monday that it has to be paid by so that it gets to the vendor timely and you don't incur a penalty. And so that way it makes pulling reports of bills due and all that very, very easy. The other thing, if you're finding cash flow issues, and this happens a lot, you have good intentions and your bookkeeper just cuts a bunch of checks, but you realize you can't afford that. We don't like that process. I mean, essentially, keep in mind, in our process, I get the 2-week cash flow forecast before we print the checks. And if we're running short on cash, then we have to, before we tell our admin which checks to print, those are taken out and set aside first, and make sure that we don't print the check until we're ready to release it. And so that's a key problem that you can avoid. As I mentioned, prepare the 2-week cash flow forecast. Pick on whatever. The 2-week cash flow forecast should occur the day before you're ready to release checks. So like I said, ours goes on a Friday. We release checks on Monday. Here's another big thing. Turn off the sweep feature on your bank line of credit. Sweeps sound like a great idea. They create unnecessary noise and movement in your bank account and only junk up reconciliations and those things. I prefer making an active process of setting your cash position on a week in and week out basis. And so that's really kind of the key, is that, once I get to that Friday report, I'm looking at my 2-week forecast. If I need to draw on the line of credit to keep bills current, then I set my position, I draw back on the line and release the checks. If I have excess cash, then I make a decision to pay down against the line and then reset cash position the following week. So those are key processes that makes life a lot simpler. The other thing is today we're moving into more electronic transactions, and so in that case, what is referred to as ACH, automated clearinghouse transactions, or what people refer to as electronic deposits and payments that are initiated by the bank. Don't wait until you get the bank statement. I mean, the idea of waiting to receive a bank statement from your bank is kind of an antiquated idea. You can log on to any bank anywhere, any day, and we think that's a critical process that actually is daily. Is the first thing your accounting department does each day is log on to the bank account and look for activity that the bank knows that you don't know. And that's a critical process, and they faithfully take that information and put it into your accounting system that day immediately upon that process. And this is my plug, that if your accounting department doesn't have a 2-monitor environment, they need 2 screens on their desk so that they can be logged into the bank on one screen, they can be logged into your accounting system on the other screen, so that while they're in the bank account information, they are entering these transactions and making sure that it balances for that day. The other thing that you can do, the banks have tremendous alert systems now that are built into their online banking process, and you can actually utilize those alert systems to notify you every time the bank receives a transaction that you may not have been notified of. The process of the customer sending you notifications when they've sent you a bill payment or those things, those are not necessarily trustworthy, because we've had situations where clients received an advice of payment from a customer, but that payment didn't show up until a month later. And so those are flawed processes. What you do know is when the bank gets it, you know you have it. And so that's a critical process. The other thing this allows you to do is do what we call a soft reconciliation each week. And so essentially you can be clicking off the items that the bank knows about, that you know about, and you both agree on, and you're essentially building a bank reconciliation on a weekly process. And then once you get to the end of the month, you just reconcile that last week's of activity, and you hit reconcile, and you're done in that process. So it really keeps the waiting on the bank statement from being, next time an accountant gives you an excuse of saying, I'm waiting on a bank statement, it's not good. So you can decide what your response is going to be, but I wouldn't be a happy camper if that happened to me. Credit cards, same process. Keep in mind that credit cards are really, every time you hand somebody a card, enter a credit card number into a website to make a payment, you've written a check. Sloppy accounting processes wait until the end of the month to get a statement, to then start the process of chasing everybody down to figure out what was spent. Once again, almost every accounting system, especially QuickBooks, allows you to download this credit card activity on a regular basis. We prefer weekly. And so once a week, you're going to download the activity. If it's a repeating vendor, QuickBooks is going to code it to the last code that it was used. You can change that if you need to. You can add descriptions, but you need to be putting every single charge into your accounting system, because if you get audited, the number one thing that they will pour through is credit card transactions. And if that auditor is pouring through paper transactions, you are opening yourself up to a tremendous amount of scrutiny of that activity, and you're going to be going backwards and pulling a lot of data. And so we want to see that data in your accounting records. Plus, it gives you vendor accountability. And so essentially, great reporting. Once you're downloading the transactions, all the vendor names are standardized. And so you can pull reports on spending with certain key vendors and understand where it goes. But the key is you've got to do this. If you don't want your accounting department to have full access, you can provide a view-only access. So you don't have to give a person, ability to transfer funds, make charges, pull a payment or a cash advance off of an account. So those are things that you can do by setting up view-only access, but you can still accomplish getting the accountability that you need. Last one is payroll. once again, looking at simplicity, people live their lives, as I said, on a weekly basis. They have monthly bills, but we find that the most common payroll is every 2 weeks, and that seems to be the one that, with the only aggravation of having 2 times a year, you got a 3 payday month, and there's techniques that we'll talk about in later blogs as to how to deal with that aspect of it. But the every 2 week payroll is the most common. And the one I probably like the least is monthly and or semi-monthly, because those are really quirky payroll periods that makes it a challenge if you're having to deal with overtime and some of those issues. So every 2 weeks is a really good system. We prefer QuickBooks Assisted Payroll if you're on QuickBooks, because it totally automates the process and leaves all of your detailed data in the QuickBooks data, so that you can do analysis of payroll, and point payroll to the appropriate places natively inside QuickBooks. If you're not using QuickBooks Assisted, we prefer using some other service, because the most common theft in a company is a company that's doing their own payroll taxes. And what happens is the person responsible for that, they prepare the payroll tax returns just like you think they would be, but they don't send them in. And unfortunately, the IRS does a pretty lackadaisical job of following up if they don't see a return. And especially if that person intercepts the mail, they may even intercept some of the notices saying, hey, you've been filing a payroll tax return, but I hadn't seen one lately. But if they steal that, out of the paperwork, that's a huge issue. And so you can have an enormous amount of money, taken out of the business by payroll tax fraud. And so that's why we really like QuickBooks Assisted, because when you hit transmit on your QuickBooks Assisted payroll, they take out the net pay and the payroll tax deposits, send it to the appropriate federal and state and local agencies, and you're done. And then your W-2s magically show up on your doorstep the second week of January. Same thing should happen if you're using Paychex, ADP, any of the other big payroll services. Word of caution: beware of PEOs that are small, because the challenge is, as well-meaning as they might be, if they get into financial challenges and they fail to pay your payroll taxes, you're still liable. And so you got to make sure that if you handle external payroll services, that those companies are faithfully doing with the money what you expect them to do with the money, and just understand that there is a risk. And so you have a general tendency to want to go with the larger, more established companies in that regard, because this can be an enormous liability that builds up before you even know that there's a problem. And so case after case of situations where PEOs or professional employee organizations, where essentially that employee is an employee of the other agency. Even though it's a PEO, it's still your employee and you're still responsible. Same for just the straight payroll services. And so as much as I like to support local businesses and those things, you just got to be really, really, really careful. You might, if you are going with somebody local, check with your insurance company to make sure if you can insure that risk. But it's really critical. Next one on payroll is payroll tax deposits. Don't think that you're going to float payroll tax deposits. If you do, for some reason, intend to do your own payroll, which we still don't recommend, but never wait to make the payroll tax deposit. Every time you make a payroll, make the deposit immediately, and you'll never have to know what the deposit rules are. And so that's really the standard of care. And you'll never have to worry about the rules. And so the other thing is, if you have an outside service, you need to automate the handoff of the payroll entries. And this is a big bugaboo, because a lot of times people will just process payroll and think they're done. But payroll, that you got a one big net number for net pay and a big net number for payroll taxes, and those go to a lot of different places. The payroll taxes is some withholding, it is some pure tax. The net pay is not truly gross pay, so it's not an analytical number, and so therefore you've got to record payroll correctly, especially because of our big theme of labor efficiency measurement. You've got to record gross pay correctly. You've got to report it timely. So if you have a significant payroll, a lot of the payroll systems now give you can structure automated entries that you can import into your accounting system with QuickBooks and other entries, and so therefore you want to automate that process if at all possible. But make it simple and make sure that it's done immediately upon the issuance of payroll. So essentially, if you're going to follow these processes, what you get at the end of the month is when the month ends on a Wednesday and I've kept everything live on Thursday, I can hit print. And we'll talk a little bit in later blogs about how to improve some of that reporting, but at least you get live data. And the most important thing is you got to get this process live, because I want good enough information timely rather than perfect information late. And when people are taking a long time to get perfect information, you also open up the possibility of fraud, and somebody's really cooking the books to tell you what you want to hear until they can't push that noodle far enough, and all of a sudden you're going to find that you got a hiccup. And so we'll touch on some of those issues in later blogs, but we think this is really something that has been a game changer for a lot of our clients. And if you've got bottlenecks, you've got to keep working with your people, and if they put up resistance, then you may not have the right people. Because this is a process we know that works. We've seen it work all across the country with the clients that we serve, and I think it can work for everybody, you know, that is in that environment. So sometimes, though, it's going to be you making a decision to remove that barrier that you're causing something to happen, and putting a delay in the process, and you got to really work through that to make sure the process keeps moving. So hope that helps, and keep the numbers simple, and I think you'll see profits improve. So until next time, we'll look to help you guys keep making profits. Thanks.